What's up, my friends? So I did something absolutely insane last month, something that every financial advisor would probably have a heart attack over, something that goes against literally every piece of credit advice you've ever heard. I applied for 10 credit cards in a single day. Now, before you think I've completely lost my mind, hear me out. I had a strategy, I had a plan, and honestly, the results were, well, let's just say they were not what I expected. Some of you are probably thinking, dude, that's financial suicide. Others might be thinking, wait, can you actually do that? And a few of you crazy ones are probably thinking, teach me your ways. Well, my friends, I'm about to take you through the entire wild journey, the good, the bad, and the absolutely shocking. I'll show you exactly what happened to my credit score, which cards approved me, which ones rejected me, and most importantly, whether this insane experiment was worth it or if I just completely screwed myself over. And hey, if you're enjoying this crazy financial content, do me a huge favor and smash that subscribe button. It really helps me out, and trust me, you don't want to miss what I'm planning next. Let's dive in. Alright, my friends, let's get into this story. And I want to start by saying, this is not financial advice. This is just me sharing my experience of doing something completely bonkers and seeing what happens. Why I even considered this madness. So first, let me explain how I even got this crazy idea. I was scrolling through Reddit one night, you know how it is, just going down those rabbit holes, and I stumbled across this thread where people were talking about something called App-O-Rama. Apparently, this is when you apply for multiple credit cards in a short period to maximize sign-up bonuses. Now, most reasonable people do like 2-3 cards over a few months, but me, well, I've never been accused of being reasonable. See, I had just paid off all my existing credit cards, my credit score was sitting pretty at 780, and I had been planning some major expenses for my business and a big vacation. So I thought, what if I could knock out a bunch of sign-up bonuses all at once? Plus, I'll be honest with you guys, I was genuinely curious about what would happen. Like, what's the worst case scenario? What's the best case? Nobody really talks about the extremes, you know? The strategy behind the madness. Now, I didn't just randomly apply for cards like some kind of financial kamikaze pilot. I actually spent about 2 weeks researching and planning this whole thing. Step 1. I mapped out my credit profile. I pulled my credit reports from all 3 bureaus, Experian, Equifax, and TransUnion. I wanted to see exactly where I stood, what accounts I had, what my utilization was, all that good stuff. My stats going in were pretty solid. 780 credit score, about $45,000 in total available credit across 6 cards. 0 balances on everything. Longest account was 8 years old. Newest account was about 2 years old. Step 2. I researched which banks pull from which credit bureaus. This is crucial, my friends. Different banks pull from different credit bureaus, and some pull from multiple. I wanted to spread out the hard inquiries as much as possible. So like Chase typically pulls from all 3 bureaus, but American Express usually just pulls from Experian. Capital One loves Equifax. Discover usually hits TransUnion. I made this whole spreadsheet mapping it out. Step 3, I targeted cards with the best sign-up bonuses. But here's the thing. Most of these bonuses require you to spend like $3,000 to $5,000 in the first 3 months. And I actually had that spending planned out between business expenses and this big trip I was planning. Step 4, I chose the application order strategically. I decided to apply for the hardest cards first, the ones with the strictest approval requirements. Because as the day went on and I accumulated more hard inquiries, my approval odds were going to get worse. The big day application marathon. Alright, so the big day arrives. I'm sitting at my computer at like 8 a.m. with a cup of coffee, my spreadsheet, and honestly, my heart was pounding a little bit. Applications 1, 3. The premium cards first up was the Chase Sapphire Reserve. This card has like a $550 annual fee, but the sign-up bonus was 80,000 points worth about $1,000 in travel, plus all the premium benefits. I fill out the application, hit submit, and approved $15,000 credit limit. Off to a great start. Next was the American Express Platinum card, even higher annual fee at $695, but 125,000 points sign-up bonus, worth like $1,250 in travel. Submit the application and approved again, $10,000 limit, 2 for 2. Then I went for the Capital One Venture X, another premium travel card with a massive sign-up bonus, submit and approved $20,000 limit. Dude, I was feeling invincible at this point. 3 premium cards, all approved, over $45, 0. My phone started blowing up. I'm talking like 15 phone calls from different banks within the first 2 hours. Some were congratulations calls for the approved cards, but others were, let's call them verification calls. Apparently, when you apply for a bunch of cards in one day, it triggers fraud alerts. Banks started calling to verify that it was actually me applying, and not someone who had stolen my identity. My credit score took an immediate hit. Within 24 hours, my credit score dropped from 780 to 721, a 59-point drop in one day. That's pretty brutal, my friends. See, every hard inquiry typically drops your score by 5 points. But when you have 10 hard inquiries in one day, the credit scoring algorithms basically think something suspicious is going on, so the impact gets magnified. The Citi card situation got weird. Remember that Citi card that was pending? Well, they kept calling me asking for more documentation, bank statements, tax returns, proof of income, utility bills. It was like applying for a mortgage. Eventually, after about a week of back and forth, they approved me for a $3,000 limit. Way lower than the other cards, but hey, an approval is an approval. The sign-up bonus bonus bonanza. Now, here's where things get interesting. Despite the chaos and the credit score hit, I now had to actually hit all these minimum spending requirements to earn the sign-up bonuses. So I had 7 cards with spending requirements ranging from $1,000 to $5,000 in the first 3 months. Total spending required, about $25,000 across all cards. That's a lot of spending to track. I had to create this whole system with spreadsheets and calendar reminders to make sure I was hitting the minimums on each card without going over my actual budget. The strategy I used: first, I used different cards for different categories based on when I got them and what spending I had planned. The Chase Sapphire Reserve got all my dining and travel expenses for my upcoming vacation. The Amex Platinum got a bunch of business expenses. The Capital One Venture X got some home improvement purchases I was planning anyway. For the smaller spending requirements, I started using those cards for everyday expenses like groceries and gas. I even prepaid some bills where possible, like my car insurance, phone bill, streaming services for the year. The results were actually incredible. Over the next 3 months, I managed to hit the spending requirements on all 7 cards. The total value of the sign-up bonuses I earned, about $6,800. That's $6,800 in cashback points and miles just for spending money I was going to spend anyway. When you factor in that I was able to pay off all the cards immediately because this was all planned spending, that's essentially free money. The long-term credit impact. Now let's talk about what happened to my credit over the long term, because this is probably what you're most curious about. Month 1, credit score was sitting at 721, down 59 points from the original 780. Not great, but not catastrophic either. Month 2 started to see a slight recovery. Score went up to 731. The initial shock of all those hard inquiries was starting to wear off. Month 3, score climbed to 742. Getting better, but still not back to where I started. Month 6, this is where things got interesting. My score jumped to 798. That's actually 18 points higher than where I started. What happened was, all that new available credit significantly lowered my credit utilization ratio. I went from having $45,000 in available credit, plus the hard inquiries start to matter less over time. After 6 months, they have much less impact on your score. After 12 months, they barely matter at all. And after 24 months, they fall off your report completely. The unexpected challenges. But let me be real with you guys. This whole experiment wasn't all sunshine and free money. There were some legitimate challenges I didn't fully anticipate. Challenge #1. Keeping track of everything. Dude, managing 7 new credit cards is like having 7 new bills to track. Different due dates, different minimum spending requirements, different rewards categories, different benefits. I had to set up different calendar reminders just to make sure I didn't miss payments or forget about spending requirements. It was honestly exhausting for the first few months. Challenge #2. The temptation to overspend. Having access to $140,000 in available credit is intoxicating. Even though I went into this with a plan, there were definitely moments where I thought, well, I could just buy that thing I want. This is probably the biggest danger of doing something like this. If you don't have serious self-control and a clear plan, you could easily dig yourself into a massive hole. Challenge 3, annual fees started adding up. Let's see, $550 for the Chase Sapphire Reserve, $695 for the Amex Platinum, $395 for the Capital One Venture X. That's over $1,600 per year just in annual fees. Now the benefits and